Good afternoon, everyone, and welcome to TBR's webinar, Security Revenue, Shifting from Core to Advancing Vendors, with TBR Senior Analyst Jane Wright. I'm Justin Surgeon, and I'm hosting today's session. In today's webinar, we'll see which security vendors are losing share and which ones are losing revenue in the enterprise security market. We will discuss the challenges faced by mature IT vendors running security business units and the ability of pure-play security vendors to drive revenue. We'll also look ahead to changes that TBR anticipates in the enterprise security market as some security vendors take more aggressive steps to reinvigorate growth and recapture share. Insights from today's webinar are from our Enterprise Security Benchmark. If you'd like to learn more about this report, please reach out to Jane or myself after the presentation. Now, before we begin, there are a few housekeeping items I'd like to cover. First, we'll be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others we've posted. Second, we'd like to open it up to a Q&A session at the end of the presentation. Please send any questions you have to the Q&A function, and we will address them at the end. And finally, we will follow up with you all via email with the slides from today's webinar, as well as a link to the previously mentioned recording within 24 hours of the conclusion of the webinar. You can also view the slides on our SlideShare account at slideshare.net/TBR_market_insight. And I will send that as well as the YouTube link, the TBRI channel link to the chat function. Now let me introduce the analyst presenting today. Jane Wright leads the security practice here at TBR. She covers the enterprise security market with a special focus on threat protection, risk management, cloud security, mobile security, malware prevention, compliance, and security services. Jane runs TBR's Enterprise Security Benchmark and oversees TBR's research into customer spending and customer confidence in enterprise security solutions. And with that, let me hand this over to Jane.
Thank you, Justin. Hello, everybody. Let's take a look at our agenda for today. Today, we're going to talk about what sets of vendors are losing share in the enterprise security market and what other vendors are gaining share at this time. Then we'll take a look at what has caused this to happen. What has been going on for some vendors that caused some vendors to lose share, and what will the other vendors who have been enjoying growth, what will they be doing to stay to maintain their growth rates in the future? And then finally, we'll take a look at where enterprise security revenue is coming from in both terms of product segments as well as geographies, and where it will be coming from in the future. Now, I just have one quick item I need to cover, and that is, what do I mean when I say enterprise security? When we define enterprise security here at TBR, we are speaking of security hardware, security software, associated maintenance, support, and subscriptions, as well as managed security services. So when I refer to enterprise security solutions, I mean all those things: hardware, software, and services, managed services. And when I say enterprise, what I mean is all non-consumer business. So this could be solution sales to small, medium, or large businesses, to government, ISPs, CSPs, OEMs. As long as it's not direct to consumer, we're counting it in our benchmark. So thank you for your patience as I explained that. And now let's go ahead and take a look at 2014, the good news and the bad news. Here we see what happened in 4Q14, and that is the particular benchmark report that I'm highlighting for you today, compared back to 1 year prior, which is 4Q13. What we did is we took all the vendors that we covered in our benchmark and we classified them as either core, advancing, or niche. And then we took a look at what their market share changes had been in this time frame. Now, I need to quickly, of course, explain to you who fell into core or advancing or niche, and then we'll come back to this slide. So let me just move forward one slide and give you a quick overview of that. So TBR took 17 vendors in 4Q14, and we classified them in these three classifications that you see. First, we identified some vendors as core vendors, meaning they are core to the enterprise security market. And they were multi-IT line vendors that have a significant security business. So for example, maybe they sell security and storage, or networking and security, or certain software products and security. So they have multiple IT lines and also a significant security business unit. And you can see the vendors that we put in that class there. Then we have our advancing vendors, and these are all pure play security vendors, so they only operate in the security market, and that they tend though to have multiple security offerings, or they've got a pretty broad reach in the enterprise security market at this point, generally over $500 million a year in enterprise security revenue. And you can see here the vendors that we count in the advancing class. And finally, we have niche vendors. Again, these are all pure play vendors, but they tend to be more focused on a particular vertical or a particular threat vector or a particular solution type. Okay, now that you've seen that and probably looked at where your company falls, let's go ahead back and take a look at that 2014 perspective again. As a whole, core vendors lost share in the market, and why is that? Well, when I speak to some core vendors, they often speak to me that for the problems that they face in their security business units of competing for the resources or the approval or frankly even just the focus that they need to run their security initiatives compared to the other IT business segments in the vendor organization. And so, for example, if you are the, say, product manager in a security business unit of a core vendor, you face very different challenges to serve your customer compared to, say, the business unit objectives for your storage business unit or your networking business unit. The security business units are trying to serve customers who are driven by fear. Fear of a breach that's going to get them on the front page of the New York Times, compared to the other business units that have other priorities, such as very important priorities, but things like helping our customers achieve higher profitability or something of that nature. Not that security doesn't also assist in that manner, but generally speaking, security business units have very different demands and needs that they need to address, and so they have a different sense of urgency and a different need to prioritize their investments in different ways. And this competing prioritization and competing needs for resources has slowed the innovation and slowed the progress of some core vendors, and it's caused this loss of market share. Now, we showed a 3% loss of market share year over year, and we are pegging this market at about $50 billion. That's enterprise, sold to enterprises, hardware, software, and services for security, managed services for security. $50 billion a year, 3% of that is a big loss. Now, on the other hand, we have the advancing vendors. Now, remember, these were the generally larger but pure play security vendors. They gained some share. Now, it's only 1% share in this particular quarter, year over year. But what I do want to mention is it actually was very significant in terms of dollars. Palo Alto Networks, for example, is one of the advancing vendors. The amount of dollar gain that they achieved in 4Q14 compared to their previous year was greater than the dollar growth for enterprise security revenue for some of the core vendors that we covered. So they're not just taking market share, they're taking wallet share. Advancing vendors are gaining wallet share. How? What we found is, of course, as we often seen, customers are increasing their security budgets. In 2014 and then up to 15, we saw customers saying that they were expanding their budgets for security by about 9%. But what we found is that 9% is mostly going to advancing vendors. So customers are not taking away their spending on their currently deployed solutions. They're still spending that. And they tend to be from the core vendors. But where they had the net new dollars, the 9% net new dollars, they're directing a lot of that to the advancing pure play vendors. And so that's why we have that growth. And finally, the niche vendors are also enjoying very good growth because they're addressing a particular need. And when customers think that particular technology will keep them from being breached, they're willing to evaluate it. So it's 2 to 4% that we do need to keep in mind that is on a relatively small base, so that percentage can appear strong. So that's what happened in 2014. What's going to happen now and what is happening in 2015 and 16? First, let's take a look at the core vendors. Core vendors are not going to let their market share continue to be eroded like this. Many of the core vendors that I spoke to seem to have a feeling that 2014 was a bit of a wake-up call, that this was the time where we need to give our security business units more autonomy and more resources so that they can keep up with the fast pace of the enterprise security market and not need to be competing with our other business units so much to move forward with their initiatives, be it a request to develop a new technology, to invest in another company, to drive a new marketing campaign, what have you. And so I see vendors giving their security business units more autonomy. I'm going to give you an example, and this is kind of an extreme example, but I like it because it comes out of the managed services community. Let's take a look at Telefonica. They are a managed services provider, better known in Latin America, but they are very large. They have a number of managed services for IT, and security is one of them. In order to capture the growth of the security market, what Telefonica did is they actually spun off a whole separate company. They started up a small company called 11pass, gave it its own profit and loss and CEO and resources, and 11pass exists to develop or invest and acquire advanced security technologies very, very quickly and then give them back into Telefonica so that Telefonica can then go out to their managed services customers and move forward more quickly and capture growing security demand. Now that's an extreme example, but I do see this in general. Give our security business units in some way, give them that autonomy, let them go off, let them be independent, give them money, give them the freedom, and let them do it, and don't make them go for approval for so many things. Let things get approved at a higher dollar value within the security business units. I also see some core vendors just in general increasing their investments and their alliance and acquisition activities in order to speed their growth. And some examples here would be certainly IBM. And another good example is Dell, with Dell Ventures making some very intuitive and very aggressive moves to invest in certain security vendors that have very differentiated technologies. So I think we're going to see more of this in 2015 and 16, and I believe this changed mindset is going to help core vendors stop the loss of market share. Now, the advancing vendors, they're having great growth. Looking at them as a whole, on average, advancing vendors grew their revenue for enterprise security revenue over 2014. They grew 33%. And I know what you're thinking. What if you take FireEye out of that? If you take FireEye out of that equation, the average growth was 28%. Still very nice. Very good growth. And what will happen in 2015 and 16 is we see advancing vendors continuing to have solid double-digit growth, 20, 30, and for some vendors 50, 60% growth throughout 2015 and 2016. This will happen even if their sales programs, their channels, their marketing initiatives, even if they're not fully developed, they will continue to grow because in security, in this market right now, technology is king. And as advancing vendors bring out a particular technology, a way to stay 2 steps ahead of the hackers, customers will buy. And this will enable these advancing vendors to continue to enjoy very good growth rates. But I did mention that core vendors are becoming more aggressive and giving more autonomy, et cetera. So advancing vendors are going to need to do something to maintain their growth rate at quite the high level. And so what we see them doing will be forming alliances. Now, alliances are nothing new, but what I'm speaking here of is alliances that go beyond the let's make our products work together kind of deals. These are going to be more of a federation. This would be, for, say, a federation of a network security specialist vendor, maybe an endpoint specializing vendor, and then probably a managed or professional services vendor. And they'll really come together in a federated block almost, where they'll each take on certain areas such as sales from one and marketing from another, and they'll each be contributing their technologies in a very planned manner. And they'll form these federated alliances for the purpose of just basically building up size and reach in the market to give them the size they will need to compete with the core vendors. Finally, the niche vendors, they will continue to grow too. The reason is, in 2014, we saw about 100 niche vendors, and these niche vendors tend to be startups, we saw about 100 startups emerge in the enterprise security space in 2014. 100 emerged with adequate funding to bring a product to market and to be viable for a few years. That has been about 100 a year in the past, and it's going to be 100 a year, if not more, in 2015 and 2016. Funding is flowing, and so we're going to continue to see niche vendors have a very solid place to play in the market, come out with that technology. Technology is king. And here, what we see is large customers in particular are willing to deploy a niche vendor's product. Now, the small and medium customers, they really can't afford the risk. They don't have the resources. But larger customers are. They're willing to carve off a project and put in a niche vendor's solution to begin gaining familiarity with it and see if it can make a difference for them. And so this will continue to drive niche vendor growth in the coming 1 to 2 years. Next, I'd like to move on and show you a key chart from TBR's security benchmark. For those of you that are already benchmark clients, you recognize this chart. This is the top line chart that shows enterprise security revenue for all of our benchmarked vendors. This is worldwide in 4Q14. Left to right, we're looking at revenue volume. So you see this, you see IBM had far and away the largest volume of enterprise security revenue in the quarter. And bottom to top is growth, revenue growth year over year. FireEye, far and away the highest growth in that quarter. I'll just pause here and mention right now we're seeing 17 vendors. With our next benchmark, which will cover 2Q15 and come out in October, we'll have 20 vendors, and we're continuing to expand the benchmark. But in any case, here are the 17 we have. And I will also mention that in our benchmark, we had this broken down by different product segments and classifications and geos. And these spheres shift around quite a bit, especially in the geos. But this is a worldwide view. So why did IBM achieve such phenomenal revenue compared to everyone else in the market? Here's the primary reason. IBM has built up its security operations centers to deliver managed services very extensively. Their facilities, their staffing, their capabilities, they're very invested and very experienced. And because of this, IBM has been able to essentially monetize almost every one of the security products they develop or acquire. They monetize it twice. They sell it first for on-prem customer-managed deployments, and then they sell it again as a managed service. Let us manage it for you. Whether it's on your premise or hosted in our cloud, let us manage it for you. And so it's a double monetization, and that really drove IBM's volume. What drove FireEye's growth? A couple of things here. First off, we all remember that FireEye was kind of a pioneer in the market around 2006 with MVX, which is their threat virtualizing, a virtualized environment where they execute potential threats and examine them. It would have been very tempting for FireEye to sit on its laurels. It certainly had a great position. But what I've seen happening is that FireEye continues to keep innovating, moving that MVX technology to other platforms, enhancing it with new algorithms, heuristics, what have you, and other things that I've heard about I've heard from FireEye on the roadmap. So that's one thing. FireEye keeps giving customers another reason to take a look at FireEye. But the other thing is, frankly, FireEye spent more of its revenue on sales and marketing than any other vendor in our benchmark. Higher percentage of their revenue reinvested in sales and marketing. And that's not necessarily a bad thing. I believe that an advancing vendor with a strong technology needs to spend like that for a period of time in order to get that message out to the market and get the market's attention to show their technology. And that's what FireEye has done. Let's take a look, as I promised, at where the revenue came from in particular. Now, I told you our benchmark looks at both customer-managed products as well as managed security services. So here we're looking at that broken down with the blue blue portion representing products that were sold to customers that customers are managing themselves, and the light blue is showing managed security services revenue that vendors earn from their own security operations centers. So not the revenue they're earning through partners, but their own operations centers. So again, we take a look at IBM on the left because they had the most revenue, and you see it's practically a 50-50 split. This is where they've taken a single product and monetized it twice to sell it on to customers to manage and to sell it as a service. Down the other end of the row, we have the smaller revenue vendors, and they don't have their own managed services yet, many of them, although some of them, of course, are selling it to a partner who then manages it through their own facilities for their customers. But generally what you see here is vendors need to be achieving about $100 million in revenue per quarter, enterprise security revenue per quarter, in order to have the resources to build out their own facilities. And then it becomes a matter of growing faster by monetizing all your innovations twice. Okay, let's take a look at that dark blue segment a little closer. Remember, the dark blue segment are the products that customers are managing themselves, hardware and software, and I wanted to show you how that is broken down, or how it broke down in sales in 4Q14. Here's a look at different segments in the market, and the way to read this, for example, is that in 4Q14, most enterprise security revenue came from application and data security solutions. So this would be things like email security, DLP solutions. And that was 34%. Second most, about 29% of the revenue came from network security solutions. That would be your firewalls and IPS. Now, this might seem a bit surprising because we hear so much about endpoint security deal sizes. We hear about an endpoint security solution that had 100,000 sensors sold or 100,000 agents renewed or what have you. And that is true. If you look at units shipped, so to speak, endpoint security gets very large deals, but still, in terms of dollar revenue, this is where, in our benchmark, most of the revenue came from in 4Q14. Let's also look at how the revenue came geographically. Here's a look at the growth rates in the different geos of the world in 4Q14. In the Americas, revenue grew 27%, the highest. EMEA grew 17%, and APAC grew slowest. And let's take a look at those three. What we've seen consistently happening in the Americas is when there's been a breach against a major American institution, well-known American brand, approximately 2 to 3 months later, we see a jump in spending, in enterprise security spending, by customers. This happens every time. And so around the September-October timeframe, we saw the breaches in 2014 at Home Depot and JP Morgan, and sure enough, a couple months later, we saw the spike in revenue. This happens consistently and will probably happen again up and down in the coming years in the Americas. Now, EMEA tends to be a little more even, but EMEA actually dropped in 4Q14. And when we questioned folks about that, what we found is that there were some conversations going on between the U.S. and the EU around the 4Q14 timeframe about what are we agreeing constitutes acceptable data privacy to kind of rationalize the EU data protection and the U.S. safe harbor program. And there was some little bit of friction there in 4Q14, and what happened was it caused some customers to delay their decisions to purchase security solutions in EMEA in the quarter. So EMEA dropped from previously they had been growing, like close to 30%. EMEA's revenue growth slowed in the quarter, But we see this as pent-up demand, and we already see it coming back in EMEA in 2015. Finally, APAC has always shown slow growth, generally single-digit growth. And the reason for that is that most of our APAC measurement is impacted by China, and demand in China tends to be relatively low because of the inherent protections in China because of the way Chinese businesses are restricted from their communications with other parts of the world. And so this tends to keep demand down in APAC as a whole. Well, thank you for your attention, and I'd like to open it up for questions now.
All right, so just a reminder, if you have any questions, please send them to the Q&A function, and let's begin. So the first question, you mentioned security budgets increased 9% 2014-2015. Was that higher or lower than before, and are you seeing greater budget increases in particular areas?
Okay, so yeah, the 9% was pretty consistent. It was about the same as the year prior, which was 2013, and was maybe a little bit higher in, say, 2012 and 11 timeframe, where it's more up around 12 and 11%, 12 and 13% revenue growth, budget growth. But yeah, customers seem to be settling around the 10% mark for growing their enterprise, their security budgets each year. But has it been changing, or where has it been changing? And that's where we're seeing something interesting. A couple of years ago, the bigger budget growers, if you will, were the larger customers. Larger businesses were really opening up their spending for security solutions back around 2012, 2013, and things were holding more steady in the medium and small businesses. But definitely around 2014, we saw a real growth start to pick up in mid-sized companies, and that would be, say, about 500 to 1,000 employees. We saw a lot more pickup there in them growing their security budgets. So that growth is trickling down as now mid-sized customers are recognizing the need to spend more for security.
All right, next question. Can you give an example of a niche vendor that is growing well and why?
There's so many. So many niche vendors are growing very well, but you know, one that comes to mind, I guess, would be BitGlass. Let's see now. So BitGlass, they've been around a couple of years. I think they've got about 50 employees, and BitGlass has a data protection solution for cloud environments. You know, I think one of the reasons BitGlass comes to mind is they've been growing very, very steadily over their 2 to 3 years in business. But BitGlass did something that really got attention from the market, and this happened about last year. BitGlass did a kind of a marketing campaign, or I don't know if I should call it that, but they did an initiative where they did a where's your data going kind of thing. And what they did is they planted some trackers in data, and then they put those data files out on the dark web, excuse me. And for you, those of you that don't know, that would be like put it out where you know black hats are looking to buy PII and credit card numbers and things like that. So they put it out there, and then they mapped and they tracked how quickly did that data get bought up by the black hats, and where did it end up? You know, did we see it in Russia 2 days later, or what have you? And they put together some pretty good graphics to show speed and the spread, how quickly your data is getting thrown out there and put out there. And those kinds of initiatives help to really draw our attention to, especially for a niche vendor, to a particular technology and the problem that a niche vendor can solve. Let's see, do we have any more questions?
I think we got one more that came in here. I saw in Gartner and IDC research, APAC has a much higher security market growth rate than EMEA and Americas. It's opposite in your 2014 Q4 number. Why is this?
Yes, so that is true. So, well, first off, I'll mention that was that chart I showed was a quarter only. It was for Q14 only. If we look at APAC for the entire year of 2014, I believe APAC's growth was somewhat higher. I think we had them around 10 to 12%. And that definitely was China impacted. If we take China out, then the growth rates for other areas such as Japan and those are up more to the high teens and 20%.
All right, we get another question that came in. You showed app and data equals 34%. Can you elaborate on the fastest top 3 segments? Would it be data security referred to stolen in U.S. and private and public organizations?
Okay, so this person is saying that we showed application and data security as a segment, so those two together was a 34% growth rate. And can I elaborate on the top 3? So that was the fastest one, and I would say within that it's actually the application side of the house that's growing a little more quickly. And then the second fastest growing was the network security. And the third was, if I recall, it was endpoint. And so let me comment on those the person recommended. I think the reason is that we're seeing growth here is this is where the advanced threat protection solutions are being rolled out primarily. So for example, the ability to perform network forensics has greatly contributed to overall growth in the network security market. In other words, if we were to just look at traditional network firewalls or even to some extent next generation firewalls, that growth alone would not be as impressive. But when we pull in the network-based advanced threat protection, threat correlation, big data analytics on network traffic, and then forensics to look at what's been going on on the network for the past year, not just in the past week or hour, that's really driving the growth in all of those segments. And then this person said, can you refer to data stolen in U.S. private and public organizations? You know, the thing that comes to mind when I read that is clearly what we've seen so far in 2015 between the White House and the IRS. Data theft is certainly really appearing in the public sector more often in 2015 versus maybe we might say that 2014 was the year of the breach against the private sector. So far, 2015 is shaping up to be the year of the breach on the public sector. I actually think, though, this is not really a orchestrated effect, but it just is the way it's happening so far. But I truthfully think, unfortunately, we'll probably see another major private company with a major breach further on this year, although hopefully not.
All right, next question. Which vertical markets are seeing the biggest increase in security spending and which are slowing?
So, you know, we always think about one of the first ones that come to mind, finance and healthcare, and then retail. But the real reason those come to mind is regulations. They have to report if they get breached. They have to report they have to notify to a wider extent. They have to report to a more granular level, more times that they've been breached. So we tend to hear about those three, the finance, the healthcare, and the retail. And yes, certainly they do get targeted because they have the valuable financial and medical and credit card information. But truthfully, though, I think that hackers are very democratic, and they are going after manufacturing for IP in terms of blueprints and developments. I really think that it's no longer just going to be those big three regulated industries, and the breaches are happening really, maybe just I would set aside perhaps education and some segments like that, but a lot broader set of segments are going to be concerned about breaches and vulnerability and increasing their spending. Okay, we see a couple more coming in.
All right. Next question. Is there any specific criteria for security vendors that are listed in your research?
Yeah, so this would be the criteria that customers look at to evaluate before they make a purchase. And, you know, this is some interesting research we're doing here. First off, you'd think there's all the usual, you know, I'm going to look at price, return on investment, things that I consider customer satisfaction criteria. And in our research, we certainly do measure that, and that's still well and good. But TBR is expanding its research to look at what we believe to be a very important set of criteria, and that's what we are calling customer confidence. Customer confidence in security, because we found that if customers feel confident that a solution is going to protect them and keep them off the front page of the New York Times for a breach, if they feel confident, they will put up with dissatisfaction in other areas. They'll put up with maybe, you know, my relationship with the vendor sales team isn't, you know, as nice as I would like, or those other traditional criteria. And so we have a number of criteria that we're already measuring, and they are things like measuring customers' perception of time to detect a breach, quality of the breach detection, not just, you know, low false positives. We're all used to needing to filter out the noise, but really the quality of the prioritization of the breach, time to respond to the breach, not just actual, but what did the customer perceive was your time to respond to the breach. And we are measuring that in customer confidence. So it's a customer spending satisfaction confidence survey that TBR is in the process of right now. So let's just take a moment and see what else we have. No, so I do see a particular question that I will need to take privately because it is very vendor specific, so I'll go off to that one privately. And then, yeah, so the rest of the ones I do need to address privately, and we will follow up with those particular folks. So if you asked a question that was not replied to here, I will reach out to you privately after, via email.
All right, so if that's all we have, thank you, Jane, and thank you, everyone, for your questions. You can follow Jane as well as TBR on Twitter, and please check out our pages on SlideShare and YouTube as well, which I put into the chat a little earlier. Now, before you sign off, we'd like to ask you to take a very brief survey when you close the window here. It'll help us improve both the information we share and how we share it with you, so that'd be greatly appreciated if you can just take a moment. Otherwise, we'll leave the chat function open for another minute or so, and if you all have one last chance to ask last-minute questions. Otherwise, we'll see you next time, and have a great afternoon.